On March the 12th, 2023, welcome to another short video from investingsuccess.ca. Here was the scene this week outside of a branch of Silicon Valley Bank in California. The bank failed. Doors were closed, and people who wanted their money out were told, sorry, come back later. The regulators from Washington are now in charge. And if there is any money that will be going out to depositors, it's in the hands of the regulators. So in this little video, I want to talk about, how could this happen? And were there any warning signs? And what lessons have we learned from this bank failure? It's been something like 15 years since the United States had its last bank failure. And that last one was Washington Mutual in 2008. And it had everything to do back then with the concept of subprime mortgage lending. Now that series of events in 2008 with Washington Mutual and eventually Lehman Brothers, that was a little different. That was like a widespread grass fire in a prairie field. It literally spanned the globe. Silicon Valley Bank, I think, is more akin to a dumpster fire. It is going to be contained. It is not going to spread, but there nevertheless are some painful lessons that everybody can learn. So the bank itself was founded way back in 1983 as a private entity, and it was founded as a bank with a difference. As early as 83, there was a lot of sense in California that the world was on the cusp of a shift in technology. There was, talk in the early 80s about how one day we would be able to use a computer-type device to send a message to somebody else. That was the concept of email. That was already talked about way back in the early 80s. The operating system on these primitive computers was, or at least one of the operating systems was Unix, and that eventually, brought people like Bill Gates into the fray, and Microsoft DOS, and eventually Windows, and Steve Jobs, and Apple, and you know the story as well as I do. By 1988, there was such a demand for what this bank had to offer, the owners decided, hey, it's time to take this thing public. And the date that I've got for its IPO on NASDAQ is May 20th, 1988. And they raised a substantial sum of money with the IPO, and they greatly expanded their footprint. And this is not just a branch somewhere in Silicon Valley. This bank has got, according to their financial statements, 55 locations across the United States. And in 2021-22, they completed some acquisitions of other banks and folded all of that into the mix. Now, the one thing, there's actually two things that jump off this horoscope at me. One is the moon is at the ascendant. I find that always curious when moon is at the ascendant, the midheaven, or a particular point. And you've also got Neptune, Saturn, and Uranus all on top of each other in this one segment of the horoscope wheel. And I'm going to show you how planets transiting past that collection of three have acted as a trigger point for price to move up or down. And it's very interesting. It's just that nobody was paying attention. So let's have a look at that. Here's a chart from 2018, 2019 into 2020. So late 2018, you'll see I've got an arrow here. That was a planet moving past that collection of three heavyweights, and it was a trigger point. And look what happened. The share price tumbled from $320 a share down to 180. And then there was another cosmic event, another planet moving past that collection of three, and it caused share price and human emotion to become more positive. People started buying. March of 2020, yeah, of course, we had the COVID panic. But if you actually look at the astrology of Silicon Valley Bank, there was a planet moving past that collection of 3 heavyweight natal planets. And, certainly COVID caused the markets to crater, but Silicon Valley Bank itself, the share price went from $270 a share down to about 130, and it was triggered by, a cosmic event. Let's talk about how their model works. So it is a bank with a difference. And, let's face it, there's money in California. Money has been made on technology in Silicon Valley. So what was happening was people with money were approaching Silicon Valley Bank and saying, I'd like to deposit my money. Bankers are saying, okay, we'll take your money, we'll give you a little bit of interest on your deposit. So now you've got a bank flush with money. And what do bankers flush with money do? They lend. But now you've got a bank that is on paper as saying, this is a bank with a difference. We're not lending to mom and pop in the form of a mortgage to buy a house. We're not lending to Sally in the form of a student loan to go to university. We are a different bank. We are lending to people, venture capitalists, who have come to us with a plan to build a better mousetrap. And they're going to build that better mousetrap and they're going to sell it. And they're going to take the proceeds of that sale and they're going to bring it back and deposit it in the bank. The bankers are going to find some other venture capitalist with an idea to build a better mousetrap. They're going to lend money to that person. That person is going to build their better mousetrap and sell it. Money goes back. So now you've got this circular flow. It is all predicated on being able to build the better mousetrap and sell it. Now, as this circular flow is ongoing, as Silicon Valley is doing what it does, you've got cheerleaders on the sideline. One of them is Mark Andreessen, very well-known venture capitalist. And he is quoted as saying, in his mind, in his theory, that we're in the middle of a big technological shift. Software companies are going to take over big swaths of the economy. So he is on the sidelines telling the bankers, go, lend, better mousetrap, do it again. And so it's a huge big echo chamber where nothing can possibly go wrong. Just keep lending and keep building better mousetraps and keep selling them. That's all fine and dandy until one day nobody wants the better mousetrap. Now you've got venture capitalists that have borrowed money. They cannot complete the development of their better mousetrap because there's nobody to buy it. Now they can't repay their loan obligations to the bank. And the whole thing starts to unravel, and quickly. I've looked at the financial statements for Silicon Valley Bank. You can do the same. It's just do an online search and you'll find their 2022 documents. Records are showing in 2022, $16 billion in deposits left the bank. That is to say, people got nervous. Somebody somewhere woke up one morning and said, you know what? I got a bad feeling about this bank. I'm going to get my money out of there today. So that person walks down to the bank and says to the banker, yeah, I've got, millions of dollars in my checking account. I need that money back. And the bankers have no choice. If you want to walk out the door, it's your money. They have to give it to you. But then if you go home and tell 10 friends what you've done, and those 10 friends all say, ooh, wow, Fred just withdrew his money. Maybe we better do the same thing. Now you've got the beginnings of a run on the bank. So what did the bankers do as people were knocking on the door looking to get their deposit money out, the bankers were busy selling whatever liquid assets they could find and turning them into cash to meet the demand for this $16 billion of deposit money that walked out the door. But then the bankers woke up one day and they realized, we're running out of liquid assets. We have nothing else to sell because everything else has been loaned out to people who claimed that they wanted to build a better mousetrap. And we can't really call that loan money because they've already spent the money in pursuit of the better mousetrap, and they are highly illiquid to the point where we're probably never going to see anything on those loans. So how do we raise more money? Here's what we're going to do. We're going to float some preferred shares, and we're going to tell people, buy our preferred shares, we're going to give you a 4% dividend. Hey, what's not to like? 4% dividend on deposit money. So now you've got people phoning up their brokers saying, hey, for my IRA account, why don't you buy me some of those preferred shares in that California thing, Silicon Valley Bank? Bankers were very cleverly using this money from preferred shares to further fund the $16 billion that was walking out the door. It got to the point where in 2022, KPMG was the auditor, and every auditor will issue what they call an audit letter to management and to shareholders. And when you read their financial statements, you can see the KPMG audit letter. And KPMG basically, they audited the financials and they said, hey, something wrong here, guys. You haven't properly accounted for the risk of all of these loans to all of these people who want to build better mousetraps. Something's going to blow up here. So kudos to KPMG for bringing that to everybody's attention. It's just that nobody listened. Nobody listened. It was such an echo chamber that the concept of Silicon Valley Bank failing was just too remote for people to even fathom. And they ignored the warning from KPMG. So the actual trigger point then for the failure of this bank actually goes back to 2021. You had Venus transiting past that agglomeration of 3 outer planets. That's a trigger point. But at that trigger point, Silicon Valley Bank was trading at $750 a share. I mean, it had all of the outward appearances of a hugely successful financial institution. What could possibly go wrong? Well, shortly after that, in early 2022, the share price broke the 200-day moving average. As a shareholder, as a trader, and investor, when you see the 200-day moving average getting breached, that's a warning sign. Something is not right. And after that, it was basically a downhill slide right to the end of 2022. The share price went from $600 a share down to $200. Earlier this year, there was a bit of a rally that was triggered by the sun transiting past these 3 outer planets in the natal horoscope. But that rally was short-lived, and it just got to the point recently where the bankers had nothing else that was liquid. They had just no other way of raising liquid cash to pay people banging on the door looking for their deposits back. And suddenly it's, oh shit, it's panic time. Let's call the federal regulators. Let's bring them in because we are effectively done. And so this whole hot, sticky mess now has been dumped into the lap of Treasury Secretary Janet Yellen. Ms. Yellen is saying, okay, but this time it's different. And she's right. This is not a grass fire on a prairie field that's spreading. This is a dumpster fire. Silicon Valley Bank actually has all of these loans on its books. It did not try to sell them off to pension plans and mutual funds and hedge funds and what have you. They kept it all in-house. So that's why I say it is a dumpster fire. It's contained. It's not spreading wildly and running around the world. So yeah, she's right. It is different. Now, what she has to decide in the next several days is she going to use print money at the Treasury Department to make this bank whole again? Or is she going to just allow some of these cash depositors to lose everything? And according to the financials, there's something like $150 billion that technically she does not have to compensate people for. So already we've seen some of the victims standing up. Roku, Etsy, Roblox, Vox Media, and these were just guys literally last Thursday, Friday that said, yeah, we got money on deposit, we realize it's gone. How many more companies are out there that had money on deposit with Silicon Valley Bank? This is going to be a very interesting week or two ahead of us as these companies fess up. And then, as I say, Janet Yellen has to decide, does she make them whole again, or does she teach them a lesson and basically teach America a lesson in bank failure? We're going to find out. And so I use this Silicon Valley Bank example as a way to basically underscore what I'm trying to do. As above, so below. That's my mantra. Events of the cosmos, events relative to the planetary placements on an IPO horoscope wheel. Those things all somehow influence our human emotion. And it's just sad that more people don't understand that. They're not willing to accept the argument as above, so below. And it's also sad that people have become divorced from what I call technical chart analysis. Even something as simple as price breaking a 200-day moving average seemingly doesn't mean anything to people anymore, when in fact it is a very loud warning bell that something's wrong out there. And so what I do in my videos, in my writing, in my books, in my blogs, in my efforts on Substack, anywhere I can, I'm just trying to help people understand that there is a connection. What happens in our cosmos affects our emotion affects the financial markets. And if you can see these warning signs, you can be better prepared, and you can get your money out of the way before a full-blown crisis actually materializes. So fingers crossed. Are there other Silicon Valley type banks out there? Are there other bankers in America that were lending to people looking to build the better mousetrap? Let's hope not. But if there were, we're going to find out real quick. And I mean, I can't possibly begin to uncover these things. There's so many of these small regional banks in America. Half of them I've never even heard of before. But if there are any Silicon Valley type failures, dumpster fires, you're going to hear about them here in the next 5 days. And yeah, it's going to rock the markets. It already has. It's, the analysts are going to start re-rating and repricing targets on a lot of these tech companies that have lost money at Silicon Valley Bank. And that's going to put downward pressure on the NASDAQ index. Is there a lesson to be learned? Yeah, the concept of lending to people who want to build a better mousetrap, that's all fine and dandy until such time as interest rates start to rise and the economy starts to slow and the demand for the better mousetrap disappears. That's the key takeaway right there. All right, so that's pretty much it for me. Visit me at investingsuccess.ca. Take a look at some of the stuff that I write about. Take a look at my financial astrology almanac. And just as a as a quick word here, recently I was looking at the movement of heliocentric Venus and Earth. And on that heliocentric investigation, I did notice that something was due to happen on the 6th of March. And what we now realize in hindsight is, yeah, that was the beginning of this serious run on Silicon Valley Bank. That heliocentric Venus-Earth cyclical study says that there's something else slated to happen in the latter part of April. And if you look at some of my other YouTube videos, I've got videos where I point out that I'm seeing cyclical type events on gold and silver in the month of April. And in those videos, I questioned, what could it be? I don't know. At the time that I made those videos, I had no idea about Silicon Valley Bank. I had no idea that any of this was going to happen. But there is something that I think is going to happen. I just don't know what it is yet. So the month of April and the remainder of March could be a little nasty. Just get ready for it. I'm in the process right now of doing a new course, which I will be uploading onto udemy.com. And this new one really follows on my mantra of as above, so below. And I talk about how the distribution of the planets in our cosmos actually conforms to the Fibonacci mathematical sequence. And that is why you will often see me in my writings, not only using astrology, but overlaying charts with Fibonacci retracement ratios. And it's all connected to events in the cosmos, which in turn influence our human emotion. And my new book, Follow the Trend, is of course going to tell you some techniques for identifying the trend and getting the hell out of the way when you see the trend go against you. And had you been a shareholder in Silicon Valley Bank, you would have gotten the hell out of the way back in 2021. You would have sensed that something was not quite right. Anyway, it all ties together, and that's what I'm here to talk about. And I do hope that I'm helping you in your trading and investing. And please keep coming back and looking at these videos. And hey, we're going to get through this dumpster fire in California, and we will survive. Have yourselves a great day, and we will talk real soon. Cheers.